if we don't want to just watch our gold leave our shores to other people, what do we do to make sure that we keep building our stores?
Let the price rise.
So keep what we have, but just make it more and more expensive.
Just, you know, just let the price rise, right? Just
Yeah.
keeps it. So by way of comparison, you know, people say, well, oh, China, mercantile, and they're globalist, mercantile. China would sit down at that same table with Michael Every or anyone accusing them of mercantilism and say, look, we shipped all this stuff. And oh, by the way, we're not necessarily manipulating our currency. We've got factories that are like literally running dark, running on AI. We have made massive productivity enhancements. And so we're just more productive than you.
Yep.
And that's just a fact. But, you know, Mr. Every, Mr. accusing us of global, you know, and I'm not picking, Michael's a friend of
Yep.
mine. So here,
Yep.
but anyone accusing them of global, you know, mercantilism, China imported 975 tons on net of gold last year. And so if I'm China, and I suspect this is what they're saying to Trump and Bessent and what they said to Yellen before them, is listen, stop. We are importing 975 tons of gold. The issue is not us overproducing with the left hand. The issue is that you are overvaluing the dollar relative to gold with the right hand.
Mm-hmm.
We ran a 1.2. So think about this. The Chinese ran in 2024 a $990 billion surplus with the world. It was the biggest surplus in world history as a percent of global trade, global manufacturing output. Biggest ever, 990 billion. Okay. China needs to strengthen it. This is, they're manipulating their currency, blah, 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 mercantilism, blah, 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 blah. The yuan strengthens sharply against the dollar. Biggest move against the dollar in a long time. First half of 2025 was the worst drop in the dollar in 55 years. And yet in 2025, guess what China's trade surplus with the world was? 1.2 trillion, up nearly 25%, despite a much stronger currency. Okay, what's the real issue? The real issue is the dollar's wildly overvalued against gold. What, and I highlighted this in 2024, I highlighted again in 2025. If you take the $1.2 trillion trade surplus of China and divide it by the 975 net tons of gold they imported, it values that gold to balance their trade at $38,220. At $38,220, China runs a flat balance of trade. What's the implication? The dollar gets waylaid.
Right.
The gold is now the reserve currency. America, you know, they whine about this. These American economists whine about this mercantilism. Listen, there's two sides of the same coin. If you want the Chinese to stop being mercantile, price your currency appropriately. The dollar is so overvalued against gold relative to what we make useful in the real world. And that's the issue. And so when we say globalism's over, yeah, I agree with Michael on that. What's that mean? I don't know if 38,220 is the price, but I think gold is going to somewhere between 5,000 where it trades today and 38,220 to balance the Chinese trade. That's until the dollar gets weak enough that people, you know, say, hey, I can actually make more of a living as an engineer making something instead of like trading monkey JPEGs back and forth, or I can, you know, day trade my stock account and make more than an engineer can. You get the dollar weak enough that we can make stuff here. And that's how you do all of those things. Is you settle in gold and you just let US's trade deficits bid gold to the moon until the dollar is appropriately valued, which is probably, I don't know, by the end of the cycle, I think DXY trades in the 60s, maybe lower. That's where this has to go.
And what general time frame are you talking about here? Because I just don't want folks to get the impression that Luke is saying, okay, gold's going to $40,000 an ounce tomorrow, right? So are we talking a half a decade? Are we talking 2 decades? Like just finger to the wind. What wouldn't surprise you?
See, I don't think it matters. Like, this is a problem with a lot of American investors. They only buy stuff when it goes up, right? This is American investors only buy stuff that goes up. Now, you know, I think it's going to happen. I think it has to happen over the next 5 to 10 years. You know, and you say, well, gosh, is that fast enough? Here's the reality. I put up a chart yesterday. It showed if you look at the S&P total return, right? So this is the S&P with dividends reinvested. Gold has outperformed S&P total return over 1 year, 2 year, 5 year, 10 year, 20-year, and 25-year basis. Basically, my entire career, I'd have made more money sitting in gold than in owning the S&P 500 total return. The only time it worked was in 2011. If you bought it 15 years ago, S&P total returns killed gold since then. Other than that, sort of every major and that was before we really started this change. Like I think we are in the very early innings of it is a matter of national security for the US to settle trade deficits, at least partially in gold, because we need the price of gold higher. We need the dollar weaker. We need defense industrial production back here. We don't want to be reliant on the Chinese to both finance our military and make our military. It's a bad idea. And so the only release valve is gold. And so I think ultimately, look, where's it going? I think it's probably going 15 to 25,000 probably over the next 10 years. You know, when you look and say, okay, a triple over 10 years, that's not bad. A quadruple or a quintuple over 10 years, you take that all day long. Now, from here, I think it's going to be more volatile than it has been because I think we're getting into that part of the cycle. And look, if I'm wrong, then the Western sovereign debt is unsustainable. And oh, by the way, the only thing you're going to want to own in that case too is gold.
Is gold. Yeah. Yep. Assets that can't have their intrinsic value inflated away. Okay, so this is super helpful. All right, so let me take it over to a new asset category. In this future that you're describing here, what role, if any, do you ascribe to, or what importance, if any, do you ascribe to Bitcoin and or US stablecoins?
I still think Bitcoin can serve as a neutral reserve asset for the people. With that said, it is trading as levered tech, high beta tech. I sold most of my Bitcoin in mid-November, in the mid-90s, thousands at, 23, 24 ounces of gold. We sit here today, it's, I don't know, $70,000 and it's 14 ounces of gold. I think it's going below 10 ounces of gold. And maybe lower than that. Until we get some sort of nuclear printing. Stable coins for me, I think stable coins are a Hail Mary to try to save the treasury market. They aren't a silver bullet to do it. They're a Hail Mary to do it. And the thing that what I have trouble understanding is if you're an American or an American, in the American system, you can put your money in T-bills and make whatever you're making today, 3.5%. I don't know, whatever you're getting, 4%, 3.5%. Why would I hold a stable coin at zero? That makes no sense. Genius X says it can't pay yield. So
if you're in the US, totally get it.
Totally doesn't make sense.
If you're in Tunisia, I get it.
If you're in Indonesia or Turkey, but here too, if you go to an Indonesian or a Turk and you say, hey, do you want a 0% yielding stablecoin backed by a T-bill? Or do you want a 0% yielding stablecoin backed by gold? I would bet you 9 out of 10, if not more, of the Indonesians and Turks will say gold. It's not even a choice. Like I saw an article, gold got killed here whenever it was 2 weeks ago, down $500 in a day, whatever.
Yeah.
People in Singapore, grannies in Singapore were standing in line for 6 hours to get physical gold. Take a number, go to the back of line, wait 6 hours, get gold. Just culturally, it's just so different. And it reminds me a little bit of that scene in Something About Mary, right? Where they're like, the hitchhiker, the psycho hitchhiker they pick up, right? And he's like, I have a new idea. It's for, they said it's 8-minute abs, but I'm going to do 7-minute abs. And Ben Stiller's like, well, what if they do 6-minute abs, right? And he just flips out. And to me, the stablecoin thing's
what? 6 minutes abs? No.
Right? To me, it's the stablecoin.
That's a great thing.
For foreigners is like, okay, well, we're going to use stable coins to enhance the dominance of the dollar system. And everyone in there, even Tether is out there setting up a gold stable coins. And that, the Chinese are setting up a gold everyone's setting up a gold stable coin. You go, for like 7 billion people, every non-American in the world that has either, seen personally or lived through a currency crisis is going to take gold over a 0% yielding gold stablecoin over a 0% yielding T-bill stablecoin, 6 days a week and twice on Sundays. And the other issue with the stablecoin dynamic then is go back to that net international investment position dynamic I talked about with Japan. The United States is on the other side of that same coin. You know, I've seen people talk about, well, we're going to run the Soros imperial dollar cycle again, like we did in the 80s. We're going to squeeze the dollar higher and flows are going to come here and bond yields are going to go down. Inflation is going to go down. There's just one problem with that scenario. The setup is 180 degrees different today than it was then.
Mhm.
In other words, if you look at the US net international investment position in 1984, when we ran the Soros imperial dollar cycle, it was positive 10% of GDP. In other words, Americans had more money overseas than foreigners had here. So when we raised rates, strengthened the dollar, all that American flow came back here. Then you can have that virtuous cycle, that Soros imperial dollar cycle. Contrast that to today. Compared to the positive 10% of GDP of net international investment position in 84, when the original cycle was run, today, US net international investment position is negative 87% of GDP. In other words, foreigners own $26 trillion more in US assets than we own of theirs.
Right.
And they have borrowed, BIS estimates, up to $90 trillion in dollar denominated debt globally, non-financial debt. So you start strengthening that dollar, guess what happens to the servicing of their debt?
Right.
It goes up. What do they sell? What do you think they're going to sell? Okay, they're going to sell $26 trillion of treasury bonds, starting with treasury bonds. So you're going to get what we've seen repeatedly over the last 6 years, which is in a crisis, 10-year treasury yield goes down for a cup of coffee, then it takes off like a scalded cap as everyone hits that bid to get dollars. Stocks are going to get killed in that too, American stocks, which back our receipts and the treasury market and funding and consumer. And that's when you tie it back to the second part of the stable coin. Okay, you're going to try to basically, like I remember there was we talked about it being possible strategy. It'd be a stupid strategy, but a possible strategy if they wanted to be stupid, which was let's go to the Europeans and say anybody that does not take dollar stable coins won't get a dollar swap line in the next crisis, and basically try to force all of those dollar deposits in Europe into
Right.
dollar stable coins. And that sounds really smart on the surface until you get to the other side of the ledger. You have to look at the other side of the accounting ledger, of the balance of payments ledger. Sounds really smart on the one side of the ledger. On the other side, Europeans own multiple trillions of dollars of treasuries and dollar denominated assets. That's what that net international investment position, along with the Japanese and the Chinese. Guess what they're going to sell? If you don't give them the swap lines, guess what they're going to sell to get dollars? They're going to
Yeah.
dump your assets. They're going to dump your treasury. So that's why I say it's more of like a Hail Mary. Like, well, great. The Nigerians or some African countries that, Besant threw out there, great. Like at the end of the day, it's not a lot of money. So to me, the whole stable coin is going to fix it. I don't think so.